Hey, it's Michael Saul, also known as Tiny, and in this video, I am going to tell you why the pullback in the stock market isn't over yet. This is for the week of September 19th, 2016. So let's take a look at what happened last week. Now, in last week's video, I talked about entering this zone, and the first time down, we would probably reverse. Well, that's exactly what we did on Monday. Okay, we came down, we gapped down, and that was basically the low. I think maybe we downticked. I don't even know. You know what? Now I got to know because I'm obsessive compulsive. So we opened at 212.39 and we went down to 212.31. So we went down a whopping 8 cents on the SPY, and then we turned and burned. I mean, just a big push up. Almost got back the entire loss of the actual live session. Of course, there was still a gap. And then on Tuesday, we gapped down and traded lower. And then on Wednesday, we, I don't know, gapped up or whatever. We tried to rally a little bit, and then we sold back off. Then Thursday, we had a big day up. And then Friday, we gapped down and sold off. And then wound up forming a narrow range candle. So you could see I'm drawing in on these purple lines a triangle. Now, it's not a perfectly symmetrical triangle because this angle is sharper, I guess. Would sharper be the right word? Than this one, whatever it is. I'm not really a geometry guy, but it's still a coil. It's coiling up. Okay, we're starting to, even if you just have to use these two candles as one candle, it's starting to coil up to overlap. Okay, now it's not what we saw here or here with these big sideways lines. But what will happen is we will get a directional move, then we will pause, pivot, and then we will get another directional move. That's the way the market works. Okay, you could see something like this down here, right? Let's take it from June. We thrust up, we pause, we pivot down here, and then boom, we continue up, okay? Now, I believe that we have lower prices to be seen, but I want to be clear. I do not think we've started the bear market. I don't think this is it. Chicken Little, the sky is falling. There's not enough evidence to show that. I don't care what the Fed does on Wednesday, what they say. It does not look like they're going to raise rates. All right. And I don't care what they say. I don't think that's going to have an effect. I do believe that we are going to go lower. A minimum level of retracement could be down here, but I think that they could knock a little teeth out and go a little bit lower. And why do I use the term knock the teeth out? Well, pullbacks for the last, unless you're, Kachingo and trying to put out these real expensive bear market lists and getting destroyed, most people are just looking for every single pullback to buy. And when something like this happens, like we saw back in June, or if we go back here to the beginning of the year, it scares people because it goes down a lot further than people expect. I remember when I talked to my friend Paul, he was talking about his clients and how for the first time in a long time, maybe ever, I don't even know, but they were not on board with getting positioned long here. After this had happened, he had talked to some of his clients. He's a money manager, and he had talked about, hey, now's the time, and there's nothing saying that this is going to be the end. It looks like we're going to, rebound from here. And he said for the first time, he was getting a lot of resistance. People were giving him a lot of resistance. Now, I don't know, like I said, if this was the first time anybody ever disagreed with adding to their portfolio or whatever it was. I'm sure that has happened, but he had made it a point. And when we did the Sunday night strategy session, he had made it a point there too. And to him, that's a glaring signal that, hey, we would do the bounce. Now, why I'm bringing that up is that I believe that we could get a similar type of move here, maybe even down to the 200-day moving average. Now, look, let me be clear. I'm not calling for a move to the 200-day moving average. That's not what I do. I'm not this big, let's make these grand predictions, and then if we're wrong, go, no, I didn't say that. Here's the deal. I believe we are going lower. I believe once this has finished forming. Maybe it's finished already, but kind of think it's going to be hard to get really big selling ahead of the Fed. That's my opinion. So I'm not really looking for a big move Monday and, oh, we got crushed into the Fed meeting. Could it happen? Of course it could happen. It's not really the best area for that to happen, the best timing area for that to happen. Now, what could happen is we could trade down Monday and then get a reversal into the Fed meeting, and then break this beautiful, which I told you is ugly anyway, this beautiful pattern I've drawn here. But for me, I want to see when this finishes, and I'm probably looking towards Tuesday, Wednesday. I mean, it's not going to be Tuesday more than likely. It's going to be Wednesday more than likely, if it's going to be one of those 2 days, because like I just said, that's the Fed announcement. And then maybe either it breaks Wednesday, or maybe Thursday comes in. Maybe Wednesday there's like, oh, okay, everything's all right. Then maybe Thursday comes in. So, and maybe it's the following week. I don't know. But I'm waiting for this to complete. Now, the beauty of having a pattern to lean against is that you don't have to get positioned until the pattern confirms. Of course, the challenge with that is you may miss it. Maybe it gaps down and doesn't come back, like what happened a couple of weeks ago, although you still could have made pretty good hay as the sun was shining, as they say. But maybe it'll gap down. Maybe there's a chance that you'll miss it. Okay, all those are absolutely viable reasons that you may want to try to get positioned in the pattern. The challenge is that if this coil does finish up, that puts us in a state of equilibrium, and that means that we could go either way. Remember, we are in a bigger picture uptrend. All right, let's grab the weekly in case you don't remember what it looks like, right? Yeah, we had a little, okay, but look, we're just coming off our highs here. So I am not calling a bear market here. I just think that we have a pullback coming. I think at a minimum to the bottom of this range. But like I said, I think the teeth get kicked a little bit here. And I think we have an opportunity to perhaps make it down to the 200-day moving average. Now, doing a rough estimate, and I'm not getting out the calculator, but doing a rough estimate, that's 7 points, which is only, whatever that is, 3.4, 3.3%. It's really not that big of a move. Now, from the highs, of course, you have to add on whatever that was down. But, I mean, that's really not that big of a move. When you think about it, I think all in, you're still going to be under 10%, because let's use 220, which it wasn't. Okay, so 220 at the SPY, 10% would be 22 points. That would put it down to 198. That ain't 198. All right, which is the next scenario. Okay, what happens if the 200-day, if we test it, we get a little bounce, right, and then maybe we go through it, or we do something like this. Yeah, then maybe 198 is possible. That would still only be, it would be less, because remember, we didn't hit the 220. It would be less than a 10% pullback if we were to test this low. So, again, not really a big deal. Let me make sure I'm doing my math right. Yeah, 220, 10% is 22 points. How about I have to check? I did good in math in school. I don't understand this. But, yeah, I mean, even all the way down here, this ain't a big deal. It's not even 10%. So, my opinion is wait for this to finish and then look for further downside here. I still believe we are in an uptrend. I still believe we're going to go to new highs. I believe the Qs have to hit new highs. Almost dropped my water all over my desk. I still believe the Russell is going to hit its all-timers again, which, it was almost there before this pullback started. Just think we have more weakness here. Wait for the pattern to finish and then look for confirmation that we're breaking down. If it goes up, yeah, I'll be wrong, but since I'm not looking to get positioned while we're in here, it's not going to hurt. All it's going to do is bruise my ego a little bit. And I got to tell you, if you're trading for ego or for pride, change your tune. Change it now, because trading for your ego, trading for your pride, the market can show you, okay, how little and how miserable you can really be. Okay, so again, let me recap it. Don't think we're in a bear market. Think we have lower prices to be seen, but I want to see this form a little bit more. And I don't expect it to break down before the Fed announcement, which is Wednesday. I do not think they are going to raise rates, but I think either way, I think we're going down after the Fed meeting. Have a great trading week. winningedgetrader@gmail.com with any questions. If you want information on getting one-on-one coaching, you can also drop me a line there as well. I've been getting some requests for it, so I'll fill you in on all the details how that works. winningedgetrader@gmail.com. I will talk to you in next week's video.